Yeah.
Like when you look at the declines, for example, in Nvidia and Broadcom, Micron's down a ton again. This week, I should say, both those stocks are down double-digit percentage points. Is that this is only going to lead to more consumption, more chips, not less. But as an Nvidia shareholder, as that stock was up quite nicely yesterday, giving half of it back again today, that's where the real questions still lie. And it relates exactly to what Steve was talking about with Microsoft and what we talked about with Meta. Any suggestion whatsoever about a reassessment of spend, you're going to look right at that stock and 100%. See the impact.
Yeah. And I think for me, one of the things as I've kind of reviewing the news with DeepSeek over the weekend, obviously costs are undeniable. The cost to build out this large language model that they did was obviously far cheaper than what the cost of to buy an Nvidia chip. But the other thing that I think is somewhat debatable is performance, right? What is the real performance? Only enterprise and only consumers can make that determination. So for me, as I look to Nvidia and I look to Nvidia earnings towards the several weeks from now. Yes, I mean, all beltways have led back to Nvidia, and now this is a complete reset. We've heard from other players, ASML, obviously as an example, talking about this is only going to spur demand. We'll see. I do think it's going to be a reset, but I do think they have the most important chips at play for this AI revolution. But it is somewhat of a reset, and I think that's good. Competition is good.
Evercore's, defending all this today. They call it generally a buying opportunity.
But Nvidia, this was inevitable, and it's always been part of my thesis, and why I don't have a big position, regrettably, because I would have made a lot more money in the stock. But part of that $80 billion in capex that we're hearing, the $65 billion in capex, I'm guessing, unless it's somewhere else, going to be somewhere else in your income statement, is going to develop of competing chips and cheaper ways to build out their AI capabilities. So it's no surprise. The only surprise with Nvidia is the timing, because they were not going to be the first semiconductor company in the history of the world to maintain a technology lead forever.
No, but of course not. But the speed in which we are asking this new question is largely unprecedented.
Well, but the price at which the stock was selling implied that the monopoly could go on for a very long time, which is why we didn't own Nvidia. And, maybe
you missed a lot. You missed a lot.
Concerns regarding the competitiveness of American AI companies and their expenditures on the cutting-edge technology caused Nvidia's shares to plummet by almost 6% during intraday trading on Wednesday, shattering expectations for a speedy rebound from losses earlier in the week. The stock of the AI chipmaker was one of the biggest decliners on the S&P 500 and NASDAQ on Wednesday, and it led losses in the Dow Jones Industrial Average. Over the past year, shares of Palantir, Broadcom, and a number of other AI hotspots have also decreased. Nvidia and numerous other U.S. tech companies were in a tailspin on Monday due to the growing popularity of an app from a Chinese firm called DeepSeek. The program uses an AI model that the company claims can perform on par with American competitors at a fraction of the cost. Alibaba, a Chinese internet behemoth, released a new AI model on Wednesday that it claims can surpass models from DeepSeek, OpenAI, and Meta platforms, sending the tech industry back into the red despite a small recovery on Tuesday. With Microsoft and Meta's earnings expected to be in the news later tonight, as both companies face pressure to demonstrate that their AI investments can produce results that justify the costs, the rapid rise of cheaper models from Chinese companies that can compete with those from top American firms has prompted a reckoning on Wall Street. Morgan Stanley analysts told clients that DeepSeek's advancements could prove positive for Microsoft and Meta, suggesting that Meta could implement them, and that Microsoft's Azure platform would benefit from a proliferation of AI models and consumer applications. Analysts have so far remained largely optimistic about their prospects. In a note sent to clients on Wednesday, analysts at Bank of America stated that they believe this to be AI's Sputnik moment, implying that competition may force American hyperscalers such as Microsoft, Amazon, and Alphabet to increase their AI expenditures, which would benefit Nvidia, Broadcom, and other AI chipmakers. Reiterating their buy recommendation and $190 price target for Nvidia's stock, they said that they saw the latest sell-off as an even better time to invest. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
There's another.
Also, reports out of Bloomberg that the government may also be working on tighter export controls for Nvidia chips. You see those shares moving down to session lows, just a little bit more than they had been, but enough probably to put some further pressure across the whole markets. Remember, Nvidia's sales of chips to China specifically are a big question mark for analysts who are trying to figure out what its revenue and earnings exposure are going to be in the next couple of quarters. They were able to kind of thread the needle on export controls earlier. That's in part how DeepSeek was able to still use those chips to create its latest large language models. If there is a further tightening, though, that would certainly be a business headwind for them. Let me just sneak in a quick mention then about, while we have you, about Nvidia. So again, would it represent a big earnings revenue headwind for them if the government clamps down further on their China sales?
Yes and no. I mean, remember, we've done the calculus on China and Nvidia and what it's meant and where those export controls already were an impact. I think the bigger issue is I wouldn't say it's existential, but what we had with DeepSeek over the last few days is one where are your biggest customers, has everybody overspent for CapEx, et cetera. That's the story with Nvidia. It's less to me about export controls in China. I'm sure the company's going to say and do and feel that they want to do everything that's on the right side of that.
Vivek Arya, an analyst at BofA Securities, believes that Nvidia, Broadcom, and Marvell Technology have a big chance in the midst of AI's rapid transition. These businesses are at the center of what Arya calls AI's Sputnik moment, comparing it to the Cold War period when the United States intensified its efforts following the Soviet Union's unexpected space launch of Sputnik. In this regard, BofA's analyst thinks that the hyperscalers and semiconductor businesses will benefit from DeepSeek's AI breakthrough, which is viewed as a trigger for an even larger wave of investment. Since DeepSeek's software contributions focus more on evolutionary advancement than a revolutionary change in AI, Arya is not too impressed. However, the ramifications for the semiconductor industry are evident. Even though DeepSeek's contributions are noteworthy, the industry hasn't seen a significant shift in direction. They do, however, speed up AI capital expenditures, particularly in AI computing TAM, which is expected to reach $500 billion or more over the coming years. The timing is perfect for Marvell, Nvidia, and Broadcom. These businesses are already in a strong position since they provide the necessary hardware for AI infrastructure. Maintaining a buy recommendation, Arya highlights that as the AI computing industry grows dramatically, the rising tide could benefit. One of the core insights Arya highlights is that the U.S. hyperscalers tech giants like Amazon.com, Alphabet, and Microsoft will continue to drive much of the AI spending in the coming years. These businesses will work to expand enterprise use cases and artificial general intelligence, AGI. Investing in cutting-edge hardware as well as software will be crucial to their success. In order to address the constantly changing demands of AI workloads, Nvidia, Broadcom, and Marvell provide the hardware capabilities as well as the flexibility to do so. By 2028, Arya predicts that the requirement for large-scale model training, AI inference, and cloud infrastructure upgrades will propel the market for AI computing to double to a value of $500 billion or more. The majority of this expenditure will be driven by U.S. hyperscalers, who will continue to be at the vanguard of the competition for supremacy in AI. This increase in demand is anticipated to help Nvidia, Broadcom, and Marvell. Given the inclusion of DeepSeek's AI software optimization in the larger context, it is obvious that the hardware aspect of the debate, ASIC versus general-purpose GPU, will keep changing. Cost-effective custom ASICs, such as those made by Marvell and Broadcom, are available, although merchant GPU NVDA may be better suited to the quickly evolving computation and model mix. The takeaway for investors is straightforward. These businesses are in a strong position to benefit from the expanding market for AI infrastructure. With AI compute TAM predicted to reach $500 billion plus, BofA views the industry's present slump as a better buy opportunity. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Move in Nvidia down 4% today in the regular trading session. Up, though, after hours. Bloomberg reporting the White House is considering tighter curbs on its sales to China. Megan Casella's got the details here. Megan.
Melissa, that's right. So that Bloomberg report says that Trump officials are having what they called early conversations about putting additional restrictions on Nvidia's chip sales to China, and specifically focused on the H20 chips. These are those scaled down AI chips that had initially been designed to get around current U.S. export controls on Nvidia's sales to China. The company saying in a statement this afternoon that the Biden administration's thresholds, they say, had been set on performance levels reached 5 years ago, and that it's ready now to work with the administration as it pursues its own approach to AI. Now, the White House and Commerce Department did not respond to my request for comment on that report, but I would caution that it's very early for any decisions on export control policy. No one is yet leading the Commerce Department or even the Export Controls Office within Commerce for the administration. So we're in very early stages here. I will add, though, Commerce Secretary nominee Howard Lutnick did today say in his confirmation hearing that he will be very strong and rigorous in his approach to export restrictions toward China in order to ensure that the U.S. remains a leader on AI. So it could suggest that this type of policy will be supported moving forward.
Hey, Gene, you just mentioned, it's NVIDIA being a beneficiary of all this. We know that, right? So a couple weeks ago, Microsoft, Meta, they gave their CapEx guidance for the year. So here we are, they're reiterating it. And, let's see how this stock, how far it could run a little bit, if it could fill in that gap from Monday. But, going back and looking at that chart over the last 3 years since it really took off, there's not a single gap to the downside. There's plenty to the upside. So I guess the question here is it going to be enough as far as this guidance is concerned, given the headwinds that we might be seeing around the globe with some of these open source models out of China? Like, is there a chance that the trade is just done for a bit?
So this is specific to NVIDIA, or the NVIDIA, maybe the broader AI trade. I think, again, we're piecing together data points real time. That's what happened with DeepSeek, is it was one data point and the market had to extrapolate it I think, out to several years. Now, since then, we've had some more data points. And like you said, with NVIDIA and their business, and I think the bottom line is this, is that if CapEx infrastructure continues to remain strong, we're going to see models, even if they're novel models like we saw from DeepSeek that can be produced at lower prices, they're still going to want to build the infrastructure to get those models out faster. So if we continue to see that, I think that this is that build out, which is what we're hearing tonight from Zuckerberg. If we continue to see that, I think that not only will the hardware spend more broadly continue, but I think that the software piece is going to start to play out. And so I think that this broad
Nvidia's stock fell over 20% on Monday as U.S. markets panicked over fears that DeepSeek's AI models will kill demand for GPUs. But Meta isn't backing off, with its CEO Mark Zuckerberg pledging that the tech giant would invest very heavily in AI, even hundreds of billions of dollars, over the long term, he said during Meta's first quarter earnings call on Wednesday. Last week, Zuckerberg declared that Meta would invest over $60 billion in capital projects, mostly for data centers, in 2025 alone. Zuckerberg stated that investing extensively in AI infrastructure will remain a competitive advantage for Meta in answer to an analyst's inquiry over DeepSeek's effect on the company's AI expenditures. It's too early to tell if demand for processors will cease growing because they are still essential for inference, Zuckerberg said, adding that Meta has billions of users and views DeepSeek as a new competition that it is learning from. According to Zuckerberg, the capacity to develop that kind of infrastructure will now be a significant benefit for both service quality and the ability to serve at the scale we desire. According to Zuckerberg, Meta wants to make Llama 4, its upcoming model, the most competitive in the world, even when compared to closed models like ChatGPT. He went on to say that, in addition to multimodal capabilities, he anticipates it will have agentic capabilities, which are something that both OpenAI and Anthropic have entered. We wanted to make open source competitive with closed models with Llama 3, he stated, and we want to take the lead in Llama 4. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.